Hey guys, Crypto Sunday, and it's a slightly green week, about 4,000 up overall. This seems to be sort of the bigger coins mostly, with one outperformer, which I will come back to. But let's move on to the news. So just looking at the CoinShares report, the basically the previous ups and downs are, from the past year are getting completely dwarfed by ETF movements. It seems now, with the US ones launching. This is why everyone was sort of so excited about them launching because some people were sort of saying, why is it such a big thing? We've already got ETFs in other countries, but the liquidity of the US. So it's in rather a large down week overall. This is from 5 days ago, so this doesn't include much of this week. But yeah, you've seen sort of large outflow again from Grayscale, kind of to be expected. I'm not really sure why people think that everyone will stay in there just because they've got capital gains tax to pay. I mean, yeah, I didn't quite understand that. You're going to have to pay it eventually. Maybe it does sort of work out better to sort of hold it and pay the fee for a while and then pay the tax later on. But I would just think you've got a larger amount of tax to pay at the time. I think their US tax works a little bit different to the UK though, so maybe it's that. Inflows into iShares, Fidelity, and the others. Um, Looking at the overall assets, Bitcoin obviously down most of that loss. Ethereum down 38 million as well. Multi-asset up again. People are putting sort of cash into this diversified fund, which is nice to see. 28 million for the month. Solana has been sort of red for a couple of weeks. That got 3 million, so that's quite good. Tiny outflow for Litecoin. Short Bitcoin up, kind of understandable. And XRP and Cardano down slightly with a little bit of other. But you are seeing, people are sort of posting the inflows, net inflows into the ETFs, but there is sort of, from the looks of it, money still coming out from other countries potentially into these ETFs in the US. So people could be, as I've sort of noted, selling a German or Swiss ETF and putting it into the BlackRock ones, for example, where people are sort of showing net inflows into the ETFs as if this is sort of outside money, completely outside the crypto industry. Where saying it's not just Grayscale, but I think they're ignoring that it could be coming out from other countries, ETFs wanting to buy a US based one. If you've got a sort of ProShares Canadian ETF, for example, that's only a small one, but say a German, small asset manager one, you could sell that and buy the BlackRock one, much cheaper fee, and maybe not getting picked up by some of the analysts. Because we've all been watching people like James Seifert and Eric Balchunas. They've been sort of doing these breakdowns of all the ETFs, but this is just new the new US based ones. This doesn't include the foreign sort of outflows potentially and where some of this new money may be coming from. It's sort of, even though it's saying net total inflows, it could still be just a sideways move from other countries. That's why we're not getting a particular rise. And of course, it's the even ETF volume overall is just a small amount of overall sort of global Bitcoin trading. You could get sort of a few whales sell $1.5 billion worth, and that could equal out all of this. But yeah, you're saying 5.8 billion outflow in total from Grayscale, 2.9 into iShares, and 2.5 into Fidelity. So Fidelity still sort of holding their own. I think a lot of people, me included, thought BlackRock would be sort of head and shoulders above all the rest, and then all the rest might do okay. But yeah, Fidelity sort of, I guess, showing that they can push it to their clients most likely. Arc doing sort of reasonably well. They're sort of always tweeting and sort of in the public eye, so expect them to do well. Bitwise, I think they're one of the cheapest, so they they just sort of do well. Well, I think they're one of the ones that are waiving their fee for a bit as well, similar to Invesco. So that may go away eventually, but 650, 290 for Invesco, and then sort of smaller ones down the bottom. And we've been keeping a keen eye on volume sort of for the more recent days. Obviously this is the total including day 1 and 2, where it was sort of big volume, but recent volume isn't looking too bad at all. You get sort of 338 million of grayscale volume. That doesn't always mean outflows. It could just be sort of trading and arbitrage type people. But yeah, 338 and then sort of 400 in volume from the iShares and Fidelity one alone, and then sort of all the rest of the volume. So volume doesn't necessarily mean flows, but it's good to see volume for even just 2 ETFs exceeding the grayscale one now. And most people were saying sort of from the beginning that this isn't going to be a sort of couple of week story. It's long term, and you've got to look months and months, even sort of a year after these ETFs launch. And you've had another large broker confirm basically that they are doing due diligence. LPL Financial Holdings, one of the largest independent broker dealers in the US. They are, it looks like, the broker for 19,000 financial advisors, overseeing 1.4 trillion in assets. And they're saying they want to sort of wait and see how it all works, and whether they're sort of liquid, whether they're going to survive. Things can be sort of very negative for the investor. They're worried that some of the ETFs could shut down. Sort of seeing assets under management sort of 61 million in the Franklin one, 114 in the Valkyrie one, 11 in the Wisdom Tree one. And they're sort of concerned that some of these could shut down if they don't have significant assets. So they want to see what will be the biggest. I think that was sort of fairly obvious. If you'd have picked the BlackRock one, then it's less likely to have that issue. But yeah, 253 ETFs they say closed down in 2023 with an average assets of 34 million. So that gives you an idea again of sort of if you're around this level, there's potential to get shut down. The fees aren't enough to sort of sustain it. And there were crypto-based ones that shut down last year. The VanEck Digital Assets Mining ETF and the Vault Crypto Industry Revolution. So yeah, you had these sort of ones with a load of miners in, and these sort of ones that had Coinbase and MicroStrategy and lots of others, sort of crypto industry specific ETFs, but not actually Bitcoin held in them. But yes, firms like this are looking into them, and sort of it is, as they say, still going to take time. LPL Financial plans to complete its due diligence on the ETFs in 3 months. So again, people were sort of saying, watch it for a week and then money will start to pile in. They're saying sort of April time they should have finished their due diligence, and they may consider adding it to their sort of recommended list. And 19,000 financial advisors can then say, maybe you should think about buying this Bitcoin ETF sort of in April or May time. So yeah, you really need to sort of look at sort of the next year rather than a week after the ETFs have launched. And sort of keeping track of these numbers is handy, but sort of it may start to die off after week of sort of not really that much happening. And yeah, I'm sure they're not going to do this for sort of 200 days, a full year or something. So we'll see. Part of the ETF launch as well means you get more of this sort of cash and carry trade with the futures, something that sort of institutions get involved in. This is not a bet on Bitcoin at all. You sell the futures and you buy the equivalent amount in the physical, or sort of the reverse, depending on which is trading higher. And basically, it doesn't matter where Bitcoin goes, that gap will close as the contracts near closing to expiry, and people are saying you can make sort of an annualized 15% a year, which is 50% more than the S&P long-term average with sort of very little risk. As I say, it doesn't matter whether Bitcoin goes up 100%, drops 50%, you basically still make that money because you're sort of net zero. You own the physical and you're shorting the futures. So you're just playing that arbitrage gap. This sort of dampens volatility and makes a more secure market, I would say. And this has sort of increased the CME to the biggest sort of futures, and this has increased CME to be the. This has pushed CME to be the biggest derivatives. This has pushed the CME to be the biggest futures market now, sort of battling with Binance, and it looks like they have sort of firmly leapfrogged 24,000 contracts this month, equivalent of 4.6 billion. And you sort of see their open interest over time when they were launched sort of way back. Then you had the ETFs start, and it's just sort of been choppy up and down, but overall up, and has sort of seen a huge spike leading up to these ETFs, and sort of spiked on the day of launch. It's come back slightly, but you can see it's looking like still an uptrend. So people are getting into derivatives, and there'll be options to come, and then sort of derivatives on the options, and it's just getting, worming its way into tentacles of Wall Street. So have to see if there's more sort of manipulation going on. This was a strange one as well. Some people are suing FTX over payouts that they're getting offered. It looks like they're sort of trying to pay people out in cash. So sort of essentially their demise caused crypto to fall. Bitcoin sort of fell to about $16,000, and say you had, one Bitcoin on FTX when they went, and Bitcoin has now risen to sort of $43,000. Got to 48,000. So let's just say for easy maths, when it was at 38,000. You still had one Bitcoin, or you're expecting to get one Bitcoin back that's now worth 48,000, and they're saying, no, we're going to sell the one Bitcoin and say pay three people out $16,000 each that had one Bitcoin each, because it was worth 16,000 at the time they went bust. So you're owed 16,000, and people are sort of saying the terms and conditions said that FTX were never loaning anything out, so we expect one Bitcoin back, not $16,000. So that seems to be rather unfortunate. I sort of had read before that they were potentially plugging the gap with a very large investment in an AI company that they had made as sort of a VC investment, admittedly sort of fraudulently. They were using customers' funds to invest in that, but the investment was there all the same, and shares of Robinhood as well. And there were sort of talks that they would be able to make people whole with that investment. So not quite sure where that has gone. This doesn't really sort of detail anything, and I couldn't see any obvious news on that. But it would be a shame if sort of you held one Bitcoin, as I say, and now it's tripled, and they just give you $16,000 as it was at the bottom, when essentially they caused the crash. Obviously, Sam's in jail and it's new people involved, so they'll just say, well, it wasn't our fault. But have to see if the lawsuits sort of are successful. And we're back to hate on the miners from the looks of it. They are sort of probably not helping themselves expanding quite as much as they are, looking to, I guess, take market share from other countries, because they all just seem to be increasing their hash rate at sort of similarly large levels. And if you all double your hash rate, or if everyone in the world doubles their hash rate, then you all mine exactly the same amount of Bitcoin. It just costs you an awful lot more. So I think they're sort of maybe competing against other countries more than each other. Obviously looking to compete against each other a little bit to get a bit more market cap, but as I say, just sort of increasing costs for themselves, but they're also increasing energy usage. So US President Joe Biden's administration has issued an emergency collection of data request to see how much energy they're all using, basically, and sort of where it is, see if they're causing issues in any particular areas. As they've said, identifying geographic areas of high growth and quantify the sources of electricity used. So are they using fossil fuels or is it renewables, and whether they'll actually start going into, are they helping the renewable industry? More people will build renewables if they know when there's oversupply, that they can somebody will be mining Bitcoin with it, so they're not going to lose that money. But I'm sure the Biden administration won't be focusing on that sort of thing. I'm sure they've got Elizabeth Warren in there at somewhere on the opposing side. But on a more positive note, I thought I'd have a quick look at DeFi Llama. It's been a little while, and things are looking up ever so slightly. This is Ethereum total value locked in ETH terms, not USD terms, because never like to look at USD terms. That just means the price is going up or down. In ETH terms, is slightly up, 35 million ETH, where it was 33, 32 a couple of months ago. So not a huge amount, but not looking too bad. Solana as well. Flick on to Sol terms, because obviously we had the very large crash, but since the crash, November, December time, you're looking at 32 million, 34 million, and it's been rising up. Got over 40, and it's now at 42 million Sol. So quite good. And I always keep an eye on Cardano as well, just to see if they're pushing on. Again, it shows the huge spike in USD terms, but that's just because the price has risen. I suppose it doesn't mean it does mean people are happy to keep it in these DeFi stuff, even though the price has risen. You could see that as a positive, but I always prefer to look in the native tokens terms. And yeah, it was at 700 million and has been rising a little, but is still in the low 700s to the mid 700s. So 700 million ADA. It's quite a small amount of total ADA. I believe a huge amount of that is just done on native staking, which you could say is not really using the network. Just looking at stable coins as well, that's not really risen a huge amount on Cardano, still at 20, I suppose you should look at that in USD value, but that's $19 million, not a huge amount there. Solana, stable coins, takes a little while to load. Take TVL off there, and we are at, that has been rising, which is good. $2.2 billion, so quite good. Little rise in the last week, actually. So very nice. And Ethereum, we are looking at, take the TVL off, and that unusually saw quite an outflow in 2023, while prices were obviously on the up, but in the last a couple of months at least, we have seen a reasonable rise, and they're up to $70 billion. So, yeah, dwarfing Solana still, but yeah, very nice. It's worth pointing out that we shouldn't forget about Tron as well. If you thought Tron was dead, it seems to be doing rather well. People say it's gets an awful lot of use in the Asian gambling market, but they also have an awful lot of stablecoin usage. So it's a 10 billion market cap coin, but stablecoin usage has been, I guess this is Tether usage has been increasing, and a lot of it is on the Tron network, and they're at $51 billion for a 10 billion market cap coin. That isn't bad at all. So yeah, I'm sure they'll, in theory, isn't that much difficulty to compete with this. It's just, very, very low fee. Even Ethereum is sort of looking to be very low fee in the future. Solana is already very low fee. But yeah, I wouldn't see that as sort of a moat, if you like, in stock terms, something that would be impenetrable for other coins to take on. So I wouldn't be a holder of Tron, but good for them, I suppose. So having a quick look at coins for the week. Bitcoin has risen ever so slightly, 1.16%, but that has provided sort of half of the gain because it's still I'm still 53% Bitcoin. Obviously Solana is a huge portion of that now, so it does move the market when it moves, or it does move my portfolio when it moves rather. So Solana was flat for the week. Ethereum up 0.7%. Chainlink, the performer of the week, 22.5%. This does seem to sort of start moving on its own essentially, and not always with the market. If everything's pumping or crashing, then it will move with that. But when you get weeks like this, just quiet weeks, and presume Chainlink is getting an awful lot of adoption, and it can do its own thing, which is quite nice. We've seen a lot of partnerships, obviously, Swift and, I think Visa sort of were working with them. And yeah, maybe they just, are getting an awful lot of usage. So good for them, and a nice rise on the portfolio. That's over half of this week's gain. Cardano up 2%, and then we go into the reds all the way down, surprisingly. XRP down 3.2%. Power Ledger still down week after week, 5.6%. Polygon 3.7%. Internet Computer is flat after a sort of reasonable rise last day or two. Audius down 4%. Quant down 6.7%. Basic Attention Token 1.8%. Gala down 9%. VeChain down 1%. And yeah, that is the portfolio for the week. So fairly quiet week. I think we're still sort of waiting for more grayscale selling to be done, and yeah, then we should sort of have a reasonable run in towards the halving, I think. So leave your thoughts in comments below if you guys are buying anything or have sort of seen anything interesting, and like and subscribe. See you soon.